Michael Burry and Cathie Wood just did the unthinkable. The two renowned investors are now fighting each other to death. In Michael Burry's latest SEC filing, he disclosed that he was shorting over $30 million of ARK's innovation ETF via put options. Obviously, Cathie Wood was not only confused but extremely furious. She proceeded to go on a rampage and completely unraveled Michael Burry's argument against her. Short sellers have been a problem with innovation-related stocks for years. Elon Musk once said that short sellers are jerks who want us dead. They're constantly trying to make up false rumors and amplify any negative rumors. Cathie Wood has had her fair share of hatred, but she is now going against the king of short sellers, Michael Burry. This video will go in depth on the heated drama and how Cathie Wood just initiated an intense war against Burry. As most of you know, Michael Burry successfully shorted the housing market in the 2008 recession and made immense amounts of profits. This led him to be one of the 4 short sellers that were featured in the movie The Big Short. Burry is now initiating what he believes will be the Big Short 2, as he thinks the biggest crash of all time is coming soon. That's right, Michael Burry has been warning of a crash bigger than the 2008 recession, the dot-com bubble, and the Great Depression. In Burry's latest 13F filing, he disclosed that he recently doubled down on his bet against the entire stock market. This bet on the crash of America was done via put options. In simple terms, a put option is a contract to sell 100 shares of a stock at a predetermined price. In this example, we are selling 100 shares of Tesla at $700 per share. The seller of the put options will have to buy those 100 shares at the predetermined price of $700. If the current price of Tesla stock is $650 per share, then we pocket the difference for those 100 shares, which is equivalent to $5,000 in profit. These put option contracts cost money in the first place, which is the premium. In this case, if the premium was $30 per share, it would cost us $3,000 to buy this put option contract for 100 shares of Tesla. By taking the profit from exercising the contract and subtracting it by the cost, then we get a net profit of $2,000, which is equivalent to a 60% overall gain for our invested money. Burry increased his position in Tesla put options by 34%, which means that he now has contracts for over $730 million worth of Tesla stock. Additionally, he also increased his put options on a treasury bond ETF by an astounding 53%, which covers over $280 million worth of the bond ETF that he is shorting. Burry also has over $30 million worth of ARK's innovation ETF via put option contracts. Burry's put options on Tesla stock, bonds, and ARK's innovation ETF practically scream that Burry thinks Cathie Wood is doomed. Of course, Cathie doesn't agree with Burry's put options, as she recently went on a Twitter rampage against Michael Burry by essentially saying that Burry hasn't seen several key indicators pointing against him. To gain some context, Michael Burry warned a few months ago that hyperinflation is coming. As a result of hyperinflation, he believes that growth stocks and cryptocurrencies will face the biggest crash ever. Cathie's argument starts out with a general view of the stock market and the economy, and ultimately ends with heated criticism for Burry in particular. Cathie said, "Most bears seem to believe that inflation will continue to accelerate, shortening investment time horizons and destroying valuations. Despite what we believe has been a supply chain related / short-term burst in inflation, both equities and bonds have appreciated since March." In other words, Michael Burry's bet, which was initiated a few months ago, is not playing out as expected. Bond yields are continuing to decline as investors are expecting lower than expected inflation. Not only that, but stocks have also continued to rise since March of 2021, which signals that the equity market isn't worrying much about inflation. Some might say that our current situation is very similar to the dot-com bubble, but that definitely isn't the case. Cathie explains that unlike the tech and telecom bubble, this equity bull market has broadened beyond the innovation strategies that boomed last year to value in other stocks that had trailed. The bull market has strengthened, setting the stage, we believe, for another leg up in innovation strategies. Since the beginning of 2021, we've seen growth stocks underperform in comparison to value stocks like legacy auto, energy, and financials. To most investors, they might think that ARK's underperformance in 2021 is a horrible sign, but Cathie knows that the opposite is true. The underperformance is a positive signal. Instead of an exponential rise in growth stocks like the dot-com bubble, we've seen growth stocks increase first in 2020, and value stocks follow with an increase in 2021. This means that the rotation will likely go back to growth soon, causing another substantial rise in growth stocks. Cathie stated that the equity market is likely to reward disruptive innovation strategies once again when headline inflation breaks and/or fears of recession increase. There are 2 scenarios here that Cathie sees the bond market predicting right now. The bond market has continued to rally over the past few months, leading bond yields to go down over the same time frame. This hints at one of the two possibilities. Investors are preparing for a recession, or inflation isn't going to be as high as expected. In the case of increased fears of a recession, investors are flocking towards bonds. As a result, the bond market is continuing to rally, and bond yields are continuing to fall. This would be beneficial for growth stocks because growth-oriented companies have to borrow money more often. So in the first scenario, growth stocks would go up significantly. The next possible explanation for bonds rallying over the past few months is lower inflation. Consumer prices are increasing all across the board, and many of us have witnessed it firsthand. However, several indicators are signaling that inflation is starting to cool down. One of these signals is commodity prices. Cathie explains that since mid-May, a number of commodity prices have been breaking down. Lumber down 65 to 70%, copper down 10 to 15%, and oil down 10%. An unexpected increase in the dollar also is negative for commodity prices. Over the past few months, we've seen the US dollar index continue to rise from 89 in May to 93 today. This, along with commodity prices falling, is pointing towards lower inflation. Not only that, but Cathie mentioned that now, the Manheim Used Car Index, a leading index for new car sales, is slipping. The Manheim Used Car Index is an index that tracks the price of used cars. This index has been falling month after month lately, which hints at lower inflation. All of these short-term deflationary signals, combined with long-term deflation from innovation and disruption, are signaling towards lower than expected future inflation. Lower inflation expectations lead investors to buy bonds, causing bond yields to go down. Low bond yields are again beneficial to growth stocks. In both scenarios that we covered, growth stocks have come out on top and will continue to do so. Cathie explains that if the bond market is correct, one or both of the scenarios will be obvious during the next 3 to 6 months. Therefore, if what Cathie said is true, the best time to buy growth stocks is actually right now, leading Burry to lose a substantial amount of money. Now, although Michael Burry successfully predicted the housing crash, Cathie believes that Burry is completely wrong right now. Cathie said, to his credit, Michael Burry made a great call based on fundamentals and recognized the calamity brewing in the housing and mortgage market. I do not believe that he understands the fundamentals that are creating explosive growth and investment opportunities in the innovation space. This might seem like nonsense, and in a sense, you would be correct. Innovation isn't creating much deflation right now, and likely won't create much deflation in the short term. For example, EVs are growing at a rapid pace, but they still make up a small percentage of total vehicles produced right now. Therefore, GDP and revenue growth likely won't be affected much by innovation in the short term. However, once exponential growth takes place, and innovation starts to make up a large portion of the US GDP, then macroeconomic indicators like inflation will be heavily affected. Cathie said that if we are correct, GDP and revenue growth will diminish until the opportunities in nascent technologies begin to move macro needles. In this environment, innovation-based strategies should distinguish themselves. So while the US GDP won't be affected much in the next couple of months, Cathie sees innovation creating a significant amount of deflation in the next couple of years. The dot-com bubble was premature, and now, we are finally seeing innovation start to make dramatic changes to our lives. Cathie then explained, in our view, the seeds for the innovation explosion that ARK Invest is dedicated to researching were planted during the 20 years ending with the tech and telecom bust. Having gestated for more than 20 years, these technologies should transform the world during the next 10 years. Obviously, Michael Burry doesn't agree with Cathie at all. He thinks that everything Cathie just said is nonsense and is all speculation. A couple of months ago, Burry pointed to the amount of speculation occurring right now and warned that a major crash was coming. Burry stated on Twitter that people always ask me what is going on in the markets. It is simple, greatest speculative bubble of all times in all things, by 2 orders of magnitude. #FlyingPigs360. Cathie Wood and Michael Burry are clearly two polar opposites when it comes to their view on the future of the stock market. Cathie sees innovation destroying risk-averse companies over the next decade, whereas Michael Burry sees almost everything crashing in the biggest collapse ever. Let me know which investor you agree or disagree with down below. If you enjoyed this video, please hit the like button and subscribe, and I'll see you in the next one.